Hi, and welcome to Crypto for Advisors, a podcast by Synergist. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Welcome to Crypto for Advisors, the podcast from Synergist. Today I'm delighted to have Andrew Ward with me. Andrew is an Australian financial services executive turned entrepreneur. Having worked at several financial institutions like CBA Private, AMP and Asgard, Andrew decided that there was a better path and fee structure for self-directed investors. He founded Self Wealth in 2011, introduced flat fee broking to Australia in 2015. He then listed the company on the ASX in 2017 and then launched a $100 million ETF in 2019. After that, he founded Platform X with FinClear, who bought him out in 2021 and renamed FCX. He then founded Liquidize in 2022, initially aimed at providing guaranteed liquidity to shareholders of private companies. This has now expanded to unlisted funds. Andrew has 3 kids, originally a Sydney boy, and he now lives in Melbourne. Still plays cricket, and he's a songwriter. So, Andrew, welcome, and I'm delighted to have you on the podcast. How are you today?
I'm very well, Andrew, and thank you very much for having me on.
It's my pleasure indeed. Okay, Andrew, you are a serial entrepreneur, so I'm really excited to get your insights into the 3 topics that we're going to cover off today. And they are, firstly, blockchain and how it is impacting financial services, particularly in Australia. The second topic that we're going to cover off is local versus global and the pros and cons of setting up a startup in Australia. And then finally, we'll touch on crypto and advice, and because our audience is largely advisors, accountants, financial planners, and giving some guidance around, well, what can you say to your clients when it comes to crypto and blockchain? But let's get into it. So you're one of Australia's leading fintech entrepreneurs. How important is blockchain and crypto to innovation in Australia?
Look, I think it's becoming more prominent. I think it's had some bad press, especially in regard to what the ASX were doing with their chess replacement, using digital assets out of New York to replace the old chess system, which was built in the 1990s. They spent a lot of money. It failed. ASIC has been all over them. So there's been a bit of bad press in Australia in regard to blockchain, but there are some amazing success stories as well. But I suppose to go a little bit under the radar. I'm a massive fan of blockchain for a few reasons, and I'm sure we'll get into that, the benefits of blockchain over traditional databases. But there are some great stories from Trovio to others. And for the last 2 businesses that I've started up, I've used blockchain significantly to enhance the customer experience and also, I suppose, the regulatory compliance.
Okay, great. So for some of our audience who might not be as familiar with what blockchain is, can you maybe give a little bit of an overview of what is blockchain and touch on those advantages that you referenced? Why is it different? How can it improve the way that we're currently doing things?
Sure, but it's not right for every business. In essence, blockchain is a decentralized, they call it a decentralized ledger, but it's a decentralized database. So in essence, you're not relying on one central counterparty. You're using a variety of different people globally to approve any transaction that occurs on that network. So you remove the risk of a central counterparty doing something wrong. But look, it's also 24/7. And it's global, which is a fantastic benefit. It's very quick. It's very fast. And it's also a lot cheaper because you get to remove a lot of the central counterparties. You don't have 3 or 4 different layers of people or companies that you're dealing with when you do a transaction. It's also instant. So it's not like the ASX, or stock exchanges around the world, which is T+2. This happens instantaneously. But I think that the greatest benefit that I see that we've used not only at FCX but also at Liquidize is the concept of the smart contract, which is developed by Ethereum, which enables you to, if this happens, then that will occur. So
Mm.
it's a fantastic piece of technology that it's called the ERC20 token, that it enables everything to happen simultaneously. So it's, rather than having 5 people go through a contract or sit down and have to work out how you're going to do things, or if this happens or that happens, it's literally written into a token that sits on the blockchain. So that enables things to happen really quickly, and it removes so many intermediaries and costs.
And also uncertainty. How it boils down in my mind is that it kind of creates a trustless system. You don't need to trust the
Yeah.
counterparties because these smart contracts are pre-prescribed. They're coded into the system. So if X happens, then Y will happen automatically. So you have this, it's immutable. It's going to happen, and it's
That's the
clear.
word, the immutable word, which a lot of people sort of just don't really sort of gel with. But really what it means is that there's a trail, an accountable trail. It's auditable. So
Yep.
there is no way to upset the system. You can always go back and see the trail of everything that's happened. So with a centralized database or a centralized system, there's always ways to, play around, but you can't on the blockchain. It's there, plain and simple to see.
Yeah, it's a concept that I think is really relevant today when we start looking at our geopolitical situation, look at Trump, and I think as Australians, we would have assumed we could trust America, and we still can, no doubt, but that definition of trust, or the scale of that trust, has really shifted dramatically in a very short period of time, and so you can really see why people are gravitating towards blockchain, where it's not a question of whether you trust that counterparty or not. It's actually trustless. You don't have to, and that's a much better system to be operating in when you realize how much things can change over a pretty short period of time.
Yeah, and there are 2 ways that the decentralized blockchain works. You've got the blockchain system, which is called proof of work. So people have to solve a simple problem, but they're all incentivized, and they are also disincentivized to do the wrong thing. But then you've got Ethereum, and there's a big a switch towards a proof of stake. So in essence, you put in your value of your tokens, and then you are responsible for creating the next block in the blockchain. But if you do the wrong thing, you lose your token. So it is very much an incentivized to do the right thing type of system, which is, I think, extremely unique. And you're not, relying on a simple company or an executive at a company to do the wrong thing.
So this technology, it's really powerful. It's still fairly new though. And as you mentioned earlier, it's not without its controversies. And as any new technology emerges, there's always failures and there's always problems, such as the ASX or the chest replacement. How healthy would you say the blockchain, community is in Australia? Do you think that it's really gaining momentum? Do you think that it's reaching a point where investors, you spend a lot of time talking to investors looking to raise funds for the various ventures. Do you think that they understand it, or are they just sort of speculating on this new innovative technology and the promise of what it could be? Where is it in its life cycle?
Well, Australia's lagging a little bit behind when it comes to, if you're comparing Australia to the UAE or Singapore. There's a bit of a sort of a lag. The understanding isn't there as much. That comes a little bit because of regulatory uncertainty through ASIC, which we can talk about in a second. But there's no doubt that this is a global industry. So blockchain isn't an Australian-based thing or a UAE-based thing. It's more a regulatory-based story. But there are many companies in Australia that are using blockchain, and there are many investors that will back it. Not so much out of Australia. There are only probably 2 or 3 significant VC or PE investors in Australia that will get into blockchain.
Yep.
But if you start to broaden your horizons and head over to the UAE or Singapore, it's a different story.
Right. Okay. Well, as we record this, the blockchain's peak body deck are holding their policy week, where they're actually drilling into exactly this and they've got a lot of
Yeah,
regulators. I think there was.
it was last year, and he does a great job in regard to what he does in regard to promoting this, and he travels the world constantly, assessing what each country jurisdiction is up to in regard to policy.
Yeah,
Andrew Bragg speaking at 12 o'clock today. So he does a fantastic job in promoting not only blockchain, but crypto in general, and they're two very different things, by the way, crypto versus blockchain. So, but he is sort of advancing the cause on both.
Speaking about that, do you think that it's going to become a key election issue in Australia? The Bitcoin Strategic Reserve became quite a significant election issue in the US under Trump, and he just honoured that promise, albeit reluctantly, it seemed, last week in the US. Do you think that as we approach our next election, that should be announced probably this weekend, I expect, do you think that it's going to become an election issue, given that 34% of Australians either own crypto today or are saying that they want to buy it in the next 12 months?
Yeah, I'm not sure if it's going to be a sway on whether you go Labor or Liberal. Obviously, the Liberal Party, courtesy of Bragg and others, are more crypto friendly as opposed to the Labor Party. But I'm not sure if it's going to be a huge swayer on which way people vote. I think that if the Liberal Party, Peter Dutton gets in, I know they are fairly friendly towards promoting ASIC and their regulation. There are a few papers out at the moment from ASIC asking questions at consultation.
Yes.
So, and I know there are probably a good 30 to 40 companies that are going to put in their submissions to how crypto is going to be regulated through ASIC. Zero Cap is a great example of a company in Australia that, as well as Trabio and others, that are significantly promoting and endorsing what we should be doing. But I think that if the Liberal Party gets in, it's going to be more favourable than the Labor Party when it comes to crypto/blockchain regulation and the way they will influence ASIC.
Okay. Look, ASIC they do cop a bit of a hard time. They get a fair bit of criticism about this enforcement through regulation kind of approach and the lack of clarity and really lagging behind other jurisdictions such as UAE, Singapore, and even the States now. But it's really hard when you're not getting any direction from the legislators, because ASIC are supposed to be enforcing what the politicians are legislating, and really there's been no appetite to have that conversation. So I think that, in my view, as the critical mass of the population start understanding crypto, being interested in crypto, and I say crypto more than blockchain, then I think the politicians, the more the consumers are interested in it and doing it, the more the politicians are then going to turn their focus to it and say, are there votes in this? And then start coming up with stronger policies, which then actually give ASIC a much better opportunity to actually create regulations.
Yeah, and a framework for it.
Yeah.
Spot on, Andrew. And I think one of the issues is, especially with the crypto exchanges and other people who want to work in the blockchain space, we went through a significant process with ASIC to get our AFSL. And in the end, we made the call, as ASIC did with us as well, that we called tokens securities. And so we got our AFSL based on securities. But a lot of people in the crypto world don't have the responsible manager or the AFSL experience to be able to actually launch an AFSL with securities as part of their allowable investments. And this is one of the big things I've talked about at the Policy Week last year with Steve, that you can actually do everything in crypto if you have the experience in securities. And you call them securities.
Does that cover things like staking and?
Yeah, as long as you have you regard them as securities or shares, you're able to do everything you need to do in the crypto blockchain space. There are a lot of different legal cases going on in the States. Ripple, for example.
Yeah, which is about to be thrown out completely.
Is this a commodity or is it a security? And everyone wants it to be a commodity because then they don't need to be licensed.
Yeah.
And they haven't got the requisite, experience to be able to get the appropriate licensing. But if you've worked in securities before and you've had an AFSL before and you call it a security, ASIC's happy.
Great insight. All right, thank you. So, Woody, let's move on to the next topic then. Local versus global. You've mentioned that there's some really much more favourable or advanced jurisdictions out there who get this technology from an investor point of view and also a regulatory framework perspective. So, Singapore, UAE, for example, and also even in the States, the crypto working group have been tasked to come back to President Trump with a new regulatory framework for crypto by August. So we should expect to see that flow through both houses pretty quickly there and get it enacted. If you're setting up a business now today, if you're starting up a brand new blockchain-based business today, where would you domicile it?
Abu Dhabi.
Abu Dhabi, okay.
I was lucky enough to go over on behalf of Liquidize to the UAE last February, March last year, to Dubai and to Abu Dhabi. It's such a different landscape. ASIC here is a government-based business, very bureaucratic, a lot of red tape. Over there, they're for-profit businesses. They're regulatory, so they're actually trying to get you to get licensed. So it's a totally different scenario. So they will encourage you to go, as long as you go there and you hire local talent and you actually set up a base. They just won't give you money if you're based in Australia. You have to actually have to go there and entice business into the country or into the Emirates. But it's a totally different scenario. They know that blockchain crypto is a significant part of their future, whether it's tokenizing gold, oil, whatever it may be, private companies, whatever it may be. But their regulators, and there are several of them. There's 4 or 5, I think, in the UAE across the different Emirates, are enticing you to come. They'll put you up for accommodation. They'll pay for most of the stuff that you need to get done. So that's where I would go. To answer your question, probably Abu Dhabi or Dubai, but Abu Dhabi is probably through ADGM, which is their main regulator, finance arm, is very welcoming and opening for good projects. Not everybody, so it's a totally different world from Australia as compared to ASIC. That being said, though, that they look very highly upon if you've been regulated in Australia, because they know that it's the hardest place to get regulated. Yeah. So if you have been regulated in Australia, you have more of an open door in other areas of the world, because ASIC's notoriously difficult to get regulated through.
Right. So that's from a regulatory point of view. What about from a capital raising point of view, and also even from accessing markets, selling your products? How would that stack up if you're, say, targeting an Australian audience, for example, as your target market?
The good thing about blockchain is it's global, so 24/7. So it doesn't really matter where you are in regard to targeting your market. Setting up in the UAE has no negative effect for targeting Australian consumers, or setting up in Singapore, etc. Really, the jurisdiction is based on your regulatory ease, because blockchain crypto is global.
Wow. So, Liquidize, are you moving to Abu Dhabi, or are you staying local?
Not at this point in time. We'll consolidate in Australia first. And as you mentioned in your intro, we're doing companies as well as funds now. It's always, as I said just a little bit earlier, let's conquer the hardest market first.
Yeah.
And then we can go global. We do have invitations to go to Abu Dhabi, but it's probably a little too early for us at this point in time. The regulation and the intros and the excitement is great. Small things, small steps first. Step
by step. Yeah. Okay. Great. All right. Well, all the best for when you seek to conquer the universe. All right. So let's move on to the advice relationships dynamic in crypto. So it's something that I'm really focused on with Synergist. That, as I mentioned earlier, 34% of Australians either own crypto today or have stated that they will plan on buying it in the next 12 months. So that's a mass market adoption, and that's of all Australians, not the adult population. And yet 89% of advisors in Australia have spoken to their clients about crypto. So that really is driving a lot of clients to go it alone, and it's fraught with risks. There are, unfortunately, a lot of scams. There's a lot of fraud. There's a lot of hacking. We just saw the Bybit hack, record biggest hack ever, happen only a couple of weeks ago, but it happens regularly. Exchanges go down. There's a lot of risks out there that new investors who don't know necessarily what they're doing are exposing themselves to, often without knowing it. So an advised relationship is supposed to be there to partially protect consumers from those risks, those investment risks, and then also to help them achieve their wealth goals. And the flip side of the risks is for crypto is that Bitcoin has been the highest performing asset class 9 out of the last 12 years when compared to property or Australian equities, US equities, all the other asset classes. That's from Bloomberg data. So they're not helping their clients get into the highest performing asset 9 out of the last 12 years, and they're also not protecting them from the pitfalls of investing in the asset class. There are legitimate fears and concerns, largely around regulation and PI insurance implications of discussing crypto with clients that is stopping them. There's also a lack of awareness and understanding or education about crypto and blockchain, which is why we're doing this podcast. What's your take on where we are today in that advice relationship? Do you think that in your experience talking to financial advisors and accountants that they want to understand it, that they do understand it, that they want to be able to talk to clients, or they just want to stay away from it? What's your take on that?
On the accountancy piece, we work very closely with BGL, which has two products really. They've got a self-managed super fund product called Simple Fund 360. Then they've got a sort of a corporate compliance product called CAS 360. So they've got 1 million companies on the CAS 360 piece. Mm-hmm. And I think they've got about 60% of the self-managed super fund market distributed through 6,500 accountants. And the number one thing, and Ron Lesh, who's the founder of that business, sits on my board at Liquidize. He was also on my board at Self-Wealth. So I'm very close to him. There's a significant level of frustration from both accountants and financial planners on the fact that they don't feel they can give advice. They're being constantly approached by their clients.
Yeah.
What is this about? This is fantastic. I'm hearing so much about this. Can you tell me more about it? They've got to send them off to all these disparate places or send them YouTube. It's very frustrating for accountants and financial planners at this point in time because they know their clients want this. I mean, this is the reason why, Synergist has come into existence. I'm sure that this is the gap that you wish and hope and, I look forward to you filling. So you're right. It's regulation. They're worried about their PI insurance. They're worried about if they say the wrong thing, that they may not be covered for it, or their clients might come back to them later at a later stage. Accountants and financial planners are most concerned about keeping their clients rather than necessarily getting new ones. So it's more about making sure that they're looked after. Your comments were spot on. So there's significant element of frustration that I've heard through the BGL network, mm-hmm. and also through my conversations with platforms like NetWealth and others that look after financial planners, that they feel like their hands are tied.
And indeed they are in a lot of ways. And this is exactly why Synergist, has focused on this service gap. Is our premise is that we think that independent education is the key to unlocking it. And because if you're in an advised relationship with a client, even if you refer them to a product provider, if something happens to that, then there is a concern that the client will come back and say, well, hang on, you told me to go and talk to them. I'm going to hold you accountable, whether that's financially or reputationally. Either way, it's a risk. And so a lot of advisors will not even refer clients to a third party to say, oh, we'll go talk to this broker or have a look at that exchange. And so having independence where you can say, well, look, come and talk to Synergist. So they're independent. They're not selling their own products and services. And they focus on educating and helping you decide whether it's the right thing for you to invest in, and if so, the best way for you to do it, hopefully, is a solution that enables accountants, financial planners to have a conversation at least with their client and provide some sort of solution to them, especially coming up to that tax planning stage before the end of the financial year.
Yeah, I think as well with the consultation papers that are out with ASIC at the moment, we'll have some clarity before the end of this calendar year of 2025 that will give the financial planning and accountancy industry a lot more confidence. And that will flow down to insurance. It'll flow down to dealer groups being able to say recommended lists.
Mm-hmm.
Only go to those ones who've got AFSLs, etc. And there will be a different type. There'll be a sort of a limited AFSL. I think that'll be approved or given to these crypto exchanges rather than just getting an AUSTRAC number. And there are 400 crypto exchanges at the moment, but a lot of them.
Technically, in Australia, we could start up a crypto exchange tomorrow, and that's part of the challenge of the industry. The way they're talking about it at the moment is a digital asset facility as the license. So they'll license the facility rather than the underlying tokens, and that helps sidestep that question around security, commodity, collectible. There's various scenarios where it could be any of those three asset classes within crypto, and that's what's been holding ASIC back a lot.
I think you're right. There are sort of three different types of businesses in this space. You've got the crypto exchanges. You've got the people who are launching their own tokens. Then you've got people who are working with blockchain. So there are three different types of businesses working in this space. And I think that's what ASIC's grappling with. It's, harping back to what I mentioned earlier, we just shortcutted and said, okay, the tokens that we use are securities. But, you sell through. But for those who don't have the experience to be able to do that, it's these limited licenses will be really interesting how they apply to not only the exchanges, but to people who want to. I don't think we'll ever get, in the short term, be able to do ICOs, initial coin offerings in Australia.
Yeah,
that's probably something that has to be done offshore. But people working in the blockchain space, they're not obviously tokenizing real world assets, etc. I think you're still going to have to work around these are securities, at least in Australia.
Yeah, and we're just at the start of that booming sort of trend of real world assets, tokenizing digital assets. It's, I think, so Larry Fink from BlackRock, I remember he spoke about 8 months ago now and said that he sees all digital assets being tokenized within 10 years. And so BlackRock are the world's biggest asset manager globally, and I think they're managing like $11 trillion worth of assets, and he's making
JP Morgan, like JP Morgan with their stablecoin.
Yeah,
these big institutions jumping on board,
and big institutions that 3 years ago were doing everything they possibly could to talk the technology down, because I think they probably saw it as an existential risk for their business models, and now they've all realized that the consumer adoption has reached a tipping point where it's not going away, and so they're flipped to say, well, how can we make money out of this as well? And now they're driving the innovation.
Well, they see the utility of blockchain and crypto / stablecoins to make their business more efficient and reduce fees to the end consumer, but still make a profit. So they've seen the benefit.
They have, yeah. And look, if you think about it from an Australian context, that's always the holy grail that all the politicians are looking for, is productivity improvements in the local economy. You can get growth by driving driving immigration up, and that's obviously been a bit of a short-term sugar hit for the last probably 6 or 8 successive governments, but has created other systemic issues in the economy. But actually driving bottom-up innovation and productivity gains is what actually is the most powerful way to get improvements in the economy. And blockchain really offers a very strong pathway to be able to do that. Take one of our most robust sectors of the economy, the financial services market. We've got a very stable, secure, well-regulated environment there, and really drive costs out, because those costs go back to the consumer or the investor as increased returns.
We've been lucky enough to be a partner with the DFCRC, the Digital Finance Research Centre, which is funded $160 million by the likes of Macquarie and all the big players in the market. And they're working very closely with the RBA. You probably heard of Project Acacia and a variety of different things they're doing to work out how do we get a central bank stablecoin? Is it a wholesale thing so that the banks can work with the stablecoin versus do we have a retail-backed Australian stablecoin? I think we're going to end up with a wholesale one, so it's just between the bank and the RBA. But that just removes so many costs. But the DFCRC are doing a fantastic job, and they're sort of driving this research and the rhetoric at the moment. So we're very working with them.
Is that a CBDC type stablecoin, or is that just a fiat-backed?
Or both.
So it's an AUD-backed
wholesale stablecoin that the banks will deal directly with the RBA.
Right. Okay. Yeah, it's interesting. In the US, they've obviously come out and said we're going to ban CBDCs. We're not going to go for a central bank digital currency. So
this will be wholesale only, so not to retail. So it's not like the banks going to the
wholesale only.
To you and me, it's literally between the institutions.
Yeah, okay.
For
our viewers, China has released their CBDC, but the criticism of it is that you're empowering or the holders of that, or you're empowering the government to have a lot of influence over the holders of that coin. So they can do things like they can track your expenditure, they can apply tiered interest rates for different, based on social scores. They can do all of these things, which it kind of goes against
Big Brother, kind of. Yeah.
Well, that's the fear, but at the same time, that the US have said we're not going to go down the CBDC route. What they have said is we do see stablecoins as becoming a major player in global financial transactions, and that is good for the US dollar. And now Europe and other places are starting to look at that and say, hang on, this is actually could make the US dollar take over global commerce even more. Do we want that? And so it's going to be interesting to see how that plays out and how different countries and jurisdictions start introducing stable coins and using it. Because if you want to send $10 million, to someone on the other side of the world with a stable coin, you can do it within minutes, at very, very little cost. But if you're trying to do that through a traditional banking system, that's taking days and huge hoops that you've got to jump through. So
yeah, so I think Australia's CBDC will be wholesale only. I think the consultation is back through the DFCRC that there won't be a retail CBDC in Australia. It'll just streamline all the costs and the timing of how the banks do or the RBA and borrowing and overnight.
Okay. Well, like the bank bill swap rates and all the money market transactions. Yeah. Okay. Well, that would drive down costs and speed things up, which is great. Fantastic. Well, look,
represents in lower interest rates? Probably not.
Let's not open that Pandora's box. Maybe for the next interview we can talk about the RBA and interest rates, or maybe not. All right. Well, fantastic. Thank you very much, Andrew. That's been really insightful. We've covered off those three topics well. Is there anything else that you wanted to mention that we haven't covered?
No, thank you very much. I really look forward to seeing how Synergist can help close this gap with financial planners. So good luck, and I'm happy to help.
All right. Thank you. Appreciate it. Okay.
Thank you.
For now.
Bye.
This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.